Okay, folks, welcome to Thursday Night Stock Charts Live. Another week. Tonight, what we're going to go over are some earnings that were reported after hours, Twitter, Intel. Then we're going to segue over into the weekly charts, and we're going to take a look at how we are poised to possibly close out the trading week. Why do I say that? One trading day left to go. A lot can happen. The charts of equities are looking very, very bullish as we proceed into Friday. But again, one trading day left to go. Then, if we have time, we're going to segue over into the members stock chart request. And we'll take some requests from the audience as well. And let's say hello. Not too many people on tonight. Eric, hello. RL. Hit LB. LB is the symbol. All right. All right, let's get to it. Twitter after hours, they reported good earnings, and the stock is doing really, really nice. We closed at 69.57, last tick, 72.96. I know. RL. All right. I need to have a background that has horse's ass behind it. I should have picked that up. Thank you for that. Yes, hit the like button. Thank you very much for reminding me. Thanks, RL. You got me there. Okay. So Twitter, looking good. And Intel. Where's Intel? Here we go. Hammered. Initially, they rallied on positive forward-looking guidance, but ultimately hammered. So what does this mean for tomorrow? Not much. If you take a look at the futures, Russell 2000, they're rising. S&P futures, rising. NASDAQ 100 futures, rising. Do we open up this way tomorrow? I don't know. But it's going to be an interesting day. So let's segue over and into the weekly charts. Facebook, Snap reported. That's right. Snap reported. Let's take a look. Wow. That's like a 2 standard deviation move right there. Huge move. FB. Wow. So that's what's dragging the Tues up after hours. MSFT. Number one component of the triple Qs. Apple, second largest component. Unch for the most part. So the reason why I'm focusing in on this is that we added to shorts today, folks. For the first time in months, many, many months, we added to shorts today. And I'll go over why in a moment. Gold is up. Okay, let's take a look. Hey, Jody, how are you? Matt Carter. Hello, sir. Bullish on SBUX. Let's see how they close out the day today. Consumer discretionary, ripping. Good looking chart. Let's go to a 4-hour view. It's very overbought short term, but it's going higher. You have RSI 4-hour time frame at, where are we? Around 75. So it looks as though we're probably going to push up higher here. I would expect, let's go to a daily chart, a pullback fairly soon. New highs here. So we pulled back, paused that refreshes, bounced, new higher high, strong stock. What can I say? I got a mosquito bite I scratched. Okay. Let's take a look at the weekly charts. Falcon. So funny. I went to get new tires for my wife's car, and when I was going there, I blew my. You blew out your own tire? That's nuts, man. That's a good story. All right, let's get to it. All right, what we like to do is begin with the bond market, because the bond market is the tail that wags a stock market dog. And so far in the week, we have a new weekly low. Remember last week when we met, this time last week, Thursday night, we were trading down below this lower band in blue. The same was true for the prior week, but the prior week we rallied back. Last week, no bueno. Big breakdown. This week, continuation breakdown on the 10-year yield, but we've rallied back well off the lows of the week. It's hard to say whether or not we're done going down here. Daily chart. We've recaptured a support level. And we closed above the 200-day rising moving average. That's pretty bullish. No breakout here on Stokes. RSI, a bit meh. So jury's out on the 10-year TLT, 20-year bond ETF. A good week. Not a great week, but a good week. Up over 0.75 of a percentage point off the highs of the week. Volume very strong. I don't like Ultimate Oscillator. I don't believe in triple tops. Let's go to a daily chart. I think we may press up higher here. Yeah, big outside reversal bar on the 20th, follow through to the downside. Now the question is, this is what we always say, the test is always at the top. Do we rally back, put in a lower high and roll over, or do we break out? And what I mentioned to members last night on Market Wrap was that you need to watch the moving averages. I'm not big when it comes down to moving averages, except when you're coming out of a long-term downtrend and all the moving averages are beginning to converge and move up. That's very, very bullish stuff. And it takes a long time for that process to happen. So here's your 50-day down here in blue. Your 20-day in red is rising and above it. Red dotted. Red solid is your 200-day moving average. And the 20-day is converging. It'll probably cross above the 200-day next week. Very bullish stuff. Volume today was very good. Okay. The tips. Up only a half percent, less than a half percentage point. Basically flat on the week. And you really don't want to see a filled candlestick at the top of a trading range. That usually means that you're probably going to get a pullback off the highs. I mean, we've rallied big here. Strong volume on the week, but a lot of that's churning. Daily chart. Again, the test is always at the top. Do we break out or do we put in a lower high and then roll over? We don't know yet. So I would not be a buyer of tips here. I would wait for a resolution of this big question mark. The US dollar. Now, the dollar is at a big milestone. This is quite the bullish chart. We are up on the week by 0.15%. And absent these prior peaks where I had this line drawn in blue to reflect where your resistance level is, I would say that no doubt dollar's going up higher. but we haven't broken out yet above this resistance level. I think if we get a tick or two higher tomorrow in the US dollar, that'll count as a breakout on a weekly time frame. And that's not going to bode well for gold, silver, etc. Daily chart. Not a great chart. Let's update this. What we're looking at here are lower highs. And here's your lower band of support in blue. There's your upper band. Ultimate oscillator, really bearish divergence. We're seeing this a lot lately. I'm not convinced that the dollar has a lot of rocket fuel left here. Let's take a look at an intraday chart. I may have to go to the UUP. I don't think there's an intraday chart here. No. Let's bring up the UUP, Dollar Bull ETF. Not a bad chart. Not a great chart. It's holding its gains. Let's see how we closed. Strong close. Nice 15-minute bar. Strong, looking good. Moving on. VIX, weekly chart. Hammered. Hammered. Strong beginning of the week. We have broken down today below support. One trading day left to go. Daily chart. Let's modify this. I think we have a breakdown. And we do. We have a breakdown on RSI. The beginning of a breakdown, not a complete breakdown on the stochastics. So the trend was up. Now it's under pressure, obviously losing momentum. One trading day left to go. Let's see what it brings. The Dow Transport, very close to a bullish Q reversal bar. Volume very strong. Stokes weak. And remember what I always like to say, Stokes declining down below 50, rallies tend to fade. One trading day left to go. Beware, daily chart. We recaptured support yesterday, a retest of support today. Is this a lower high? We don't know. But what we want to do is memorialize where we're at. Volume rose to the downside today. That's my tagline, MacArthur. I gotta use that because it's so true. It's so true. Dow Jones weekly chart, a bullish Q reversal bar, meaning we're right at the highs of the week, and poised for a breakout. Volume is probably going to roll in light. Daily chart. Very close to a breakout. Let's just say we closed at resistance. Play it conservative. up volume decline. Now this is the trend, folks. This is what we look for. You have 3 back-to-back up days. Ideally, they're coming on rising volume. That's not the case here. That doesn't mean we're not breaking out, though. S&P 500 weekly chart. We still have a rollover and a breakdown on your stochastics. These are a momentum indicator. So the momentum is certainly waning here. That's not over. That is certainly not a good thing for the S&P 500. Now, RSI is hooking up, but that is under a bit of pressure, but not horrible. Volume is not great. MACD, not great. Daily chart. Bullish key reversal bar on the day. Light volume. This is not the right chart. This is a day. I know. I'm saying, why does this chart look so familiar? Daily chart, Bob. There we go. Okay, so here was our breakdown here on the 16th. Rallied back, and as I always like to say, the test is always at the top. Do we break out or do we break down? And should we roll over here and break to new lower lows below the Monday lows, look out below for this market. Volume trending down. IWM, of which we added short today. The weekly chart is not a good looking chart. Despite the fact we're up on the week over 1.5%, this is not a good looking chart. We have a breakdown in RSI. Stokes are weak, losing momentum. We're up on the week, but we faded off the highs of the week. Volume is strong. Daily chart. Now, here's the reason why we added more to the short side on the IWM. We rallied yesterday up and into this upper band of resistance in blue, connecting these prior peaks. Remember, the small caps have already put in a double top, and they've already broken down to new lower lows, right? That 221.13 mark is the lower low that says, okay, the path of least resistance has now gone from going up to now down. So that's why we added more to our short, and I haven't done it in months. It's been a long time since we added to a short. And volume was very heavy. So that's IWM. Now for the Qs, of which we also added to our short today. This weekly chart does not give me the warm and fuzzies knowing that I have a short position. There's a strategy though. So as I always like to, let's go over the the weekly chart, and I'll go to the daily chart. We'll talk about strategy. So reversal bar off the lows of the week, volume light, RSI still looks strong, Stokes still looks strong, daily chart. Okay, so I didn't want to go adding to shorts here on the sell-off, because you know you're going to get a rally back, because topping is a process. Rarely do you get a drop, just a simple drop, absent a binary event. What might that be? The CCP virus, a geopolitical event, the shutting down of the Straits of Hormuz, something nuts like that. We don't have that. So what we need to do is show patience, allow for a rally back, and then take your crayon out and say, okay, what you're looking for here after a big 3-day rally is a lower high. Now, you may be saying, man, you're playing with fire, aren't you? Am I? Am I really? if you think about it, what's truly the strategy? What's the exit strategy for the shares that I put on today? When do I want to take them off? Well, if we begin to break out to new all-time highs, we're going to take that position off. Not all of it, just what we put on today. We lighten up. We were wrong. We were wrong. We exit that portion of the trade. We live to play another day. We'll look for another topping action. But what if? What if, in fact, we do put in a lower high and we do begin to break down to new lower lows as the small caps have already already done. It's done. That's already happened. So you have the small caps rolling over, busted, broken. What's next? Well, could quite possibly be the Tues. And I'll always take you back. Look at the volume. Horrible volume. To me, this is all a short squeeze. Now, we have a lot of tech earnings coming up. That may allow the Tues to break out, or if they disappoint, to break down. So we have a catalyst out there. I'm not going to go to the intraday charts. They closed pretty strong. What else do we want to go over here? Hey, Franklin. The banks. Weekly chart. Very difficult week for them relative to the rest of the market. And frankly, if yields close weak this week, it's going to be hard for them to continue to break out here. We have a reversal off the lows. We have yet to recapture prior support. We're right at it. Stokes are losing momentum. Daily chart. A down day today, over a percentage point. They're so weak, they can't stay above 50 on RSI. Volume was very, very light today. I'd be careful of the banks. With yields weak, I'd be careful of the banks. Technology, strong day. A strong week, I should say. Bullish key reversal bar. Volume light. Daily chart. Just like with the Tues, look at the volume dropping off. Take your crayon out. Lower high potential. We don't know that to be a fact. But we know that if we are right in this call, a break below 147.37, you want to be looking to add to shorts. The semis. Franklin, you were asking about these this morning. I did a chart on this morning. I said they were bullish. They are having a very good week so far. We do have weekly resistance immediately above. Volume is probably going to roll in about average. RSI looking good. Daily chart. Down day today. That was volume. Not too bad. So it's kind of disappointing that the semis underperformed today. So we do have resistance immediately above. That could be a reason why you saw some trepidation on the part of traders. So interesting price action relative to the rest of tech on the semis. Biotechs. Weekly chart. This is a leveraged ETF, so keep in mind when you're looking at the percentage gains, it's multiplied times 3. So we're up on the leveraged ETF 4.2%. Stuck at resistance. Volume is probably going to roll in slightly above average. Daily chart. Bearish key reversal bar today. Not good. We were above support 1 day, 2 days, third day. Excuse me. I tried to say third day. I don't know what I actually just said. I have no idea what just came out of my mouth. Third day, bearish key reversal bar. So this is why I always like to use the 3-day rule, meaning you get your day 1 breakout, day 2 retest, ideally day 3. If you don't get a continuation move, you get another retest. No bueno. Breakdown. Avoid. Consumer discretionaries, weekly chart. Bullish key reversal bar. I forget who said they like Starbucks. Oh, McCarter. I had a call on SBUX, payout of profits today, bought another one, and looked at puts. Overbought intraday. I'll go over the daily chart and weekly chart in a moment. XOY. Good looking chart here, man. We're still remaining in a downtrend on RSI. Kind of freaky. Also on Stoke RSI. Let's memorialize this. Volume this week, very strong. Watch for a potential head fake breakdown here. Price action looks good. Volume action looks good. Indicators a bit iffy. But if I had to choose indicators versus price and volume win every single time. Daily chart. The daily chart looks good. Volume is good. So consumer discretionaries looking strong. SBUX sticking with the consumer discretionary theme. Wow. Monster week. When do they report earnings? Anybody know? Monster week. I would not short. I wouldn't buy puts on this. The weekly time frame looks very strong. Daily chart. How's volume? Volume is very light. Okay. Strong 3-day price action. Good volume today. Really good volume today. I wouldn't short it. I think it's going up higher. Energy. Up on the week finally. Just hardly up. And this is the cyclical trade, right? You have weak yields. This is what happens. Energy gets walloped. I'm surprised the transports rallied back so strong. But energy rallied back as well. Stokes are weak and getting weaker. RSI weak, down below 50. And you can see here the correlation between oil, XLE versus oil, USO, is breaking down. It's still very strong, but it's nowhere near as strong as it has been over the past 18 months or so. Daily chart. And I think it has to do with yields. Because oil has remained fairly strong, whereas energy stocks have taken it on the chin. I think we need a rollover here on both Stokes and Price to get that higher low put in to validate that what we're seeing here is a bottom. If you're a long-term investor, I would have no problem with a nibble here. Oil is up on the week. Not much better than the energy stocks, though. But they have certainly not had, oil certainly has not had the correction that energy stocks have. And that's why you're seeing that correlation break down. Daily chart. Now, here's what would scare me, were I long of oil. Let's update this. What we're going to do here is we're probably going to pop up higher. But the problem for oil is that when we do, or if we do move up higher, we're going to rally right into the prior lower band of support, which is now going to act as resistance. And we're stuck on the daily chart, unable to close above the 20-period moving average. You can see there was a slight fade off of that resistance level. Volume was light. Let's take a look at how we closed today. I like to see whether or not in the final 15 minutes or so, was there a tug of war between bulls and bears? It gives you a clue into the mindset of institutional traders who put their trades on in the final minutes of trade for the following day and the weeks. And it was not a good close. We're coming off of overbought levels. Remember, this is only a 15-minute chart. I am not a day trader. Big volume into the close. Big selling into the close. Let's do a deeper dive to a 5-minute chart. Yeah, this is probably going to push lower. Declining Stokes down below 20. Rolling over, not good. Big volume into the close. We're probably going to see weakness tomorrow morning or overnight on oil. Emerging markets, weekly chart. Not looking good here. Not looking good at all. Your RSI is in a downtrend. Stokes, lower highs. And we've broken down below critical support. This 95 mark on the EDC has been strong support for months. Now we're below it. Volume weak. Daily chart. They rallied back off the Monday lows. I don't like this at all. Lower highs and lower lows. But here's one, actually two bits of sunshine. Maybe a higher low here. Maybe a higher low here as well. It only becomes a higher low when you break out to a new higher high. We're not there yet. Price is weak. Remember where we're trading on a weekly time frame. That 95 mark is really critical resistance. Well, we actually traded above it today, closed above it. But in that neighborhood, 96.40, the highs of the day are pretty much where resistance is on a weekly time frame. Now, what will help emerging markets is a weaker U.S. dollar. But until we see a break in the dollar, I see no reason to go buying emerging markets. For those wondering, why does the dollar matter for emerging markets? Remember that emerging market debt is denominated in US dollars. Also, they are exporters by and large, not all, but most are exporters of commodities, which are also priced in dollars. So when the US dollar declines in value, their debt declines in value while their currency rises in value because the commodities that they export rise in dollar terms. So a declining US dollar is great for emerging markets. So we're not there yet. The dollar is still fairly strong. It's threatening a weekly breakout. A little bit of topping action so far this week. I'm not going to be satisfied till we see a break in the US dollar before we start putting money into emerging markets, which is the game plan. Gold, weekly chart. We're in an ascending wedge formation here. I don't like this chart at all. And it behooves me in my portfolio to see gold move up higher. So I'm not talking my book here. Now, what I want to see on these stochastics is a double bottom. Not a break, but a double bottom. And on RSI, I need this trend to hold firm and not break down. Because this chart to me just screams of possible break. Now, we've been here before. We had an ascending wedge here, but that got resolved to the upside. So I'm not saying that it's impossible for a breakout to happen. I just don't generally see breakouts from ascending wedges occurring all that often. More often than not, they break down. So we are entering a seasonally favorable period of time. The month of August, seasonally favorable. So hopefully I'm wrong here. I want to be wrong. Daily chart. Now the daily chart is constructive. Because what we're seeing is a higher low get put in. I mean, this is a very nice consolidation or a compression zone. Now, what we really need to happen here, these Stokes declining so firmly, it's disturbing to me. I hate to see it. So what we need to see is this, a hook up. That will send gold ripping. But you could bet if that occurs, in all probability, absent a geopolitical event, the dollar is going to be declining. If you get a scary geopolitical event that occurs, the dollar and gold can rally in tandem for a while because they're safe haven plays. The gold mining stocks, of which we own, we're long of this. Gap down this week. We're off the lows of the week, but down over at 1.5%. Stokes are very oversold. So we're nearing a bottom here. I'm not saying that this is a bottom, but we are very, very close to a bottom on the gold stocks. I'm not going to put a support level here. 42 may be it. And you could see that going back in history on your stochastics, we're at levels where generally you get a pop at the extremes when you do get down this low. That doesn't mean we're going straight up higher. It just means that we're probably going to consolidate, bias to the downside, and then we'll get another move up higher. The silver miners, same deal here. We added more earlier this week on the sell-off. Now, the silver miners are generally more volatile than the gold mining stocks. I would like to see a close back above this support level at around 1350. If we do get that, I would look to add more to the trade. Right now, I'm concerned that we did put in a new weekly low. We broke support, which is held for many, many months. So we really need to see a close back above 1350. One trading day left to go, and a lot can happen. Silver. We've hit support. Stokes are not at extreme oversold levels. I'm going to give this a wide berth. I like the way it's closing on the week, or poised to close on the week. Down volume light. So we may be looking to add to silver pretty soon. Now, I was chatting earlier with one of our fellow members, Larry, and he drew my attention to coffee. And coffee is just ripping through the ceiling. And we spoke about coffee a number of weeks ago, months ago now, on a monthly time frame that had broken out. And the reason why I'm bringing this up, I want to bring it back to the inflation conversation, because there are a lot of concerns out there that we're entering a round of deflation. I'm not seeing it. I did see a video that was published by, it was an interview actually of George Gammon. And it was about 2 weeks ago. He was talking about the repos, those big repos that we saw by the Federal Reserve. And he did a really good explanation of defining what the impact of that was on the markets. And one day the Federal Reserve took in repos from private banks, the money center banks, of nearly $1 trillion in one day. And what that does is it wipes out a lot of the QE that the Federal Reserve has done. So it's like a stealth rate hike in a way. So, long story short, what Gammon was talking about was that the reason why you're seeing all these reverse repos was that other banks don't want to lend to other banks. And we've seen this before. We saw it big time, well before the financial crisis. And he also pointed out that it is a deflationary event, not inflationary. And if I can find that video, I'll share it with anybody on our opt-in email list. So enter your email address below. I was watching my iPad out by the pool, and I didn't save it to share. So I'm not even done listening to the whole thing, but very interesting. I'll share it out to members later on too, as well, and anybody on our email list. So stick around for that. So going back to the inflation trade, I haven't bought into the deflation trade. I haven't seen it. Traders want to talk about, oh, look at the price of lumber and how lumber has come in dramatically. Yeah, it's down well off the highs of the year, but it's still up well over 30% year over year. They don't want to talk about that. So be careful of the data that you look at. A lot of these traders, or a lot of these talking heads on CNBC, Bloomberg, especially Bloomberg, and CNBC, Fox News to a lesser extent, they want to give you the rosy picture. Look at the macro picture, take a step back, and get the big picture feel. And if you take a look at lumber, case in point, here's a weekly chart of lumber, up nearly 21% on the week, 21.5%, just over. This is probably a bottom, assuming that we close at or near the highs of the week. Very strong price action. And year over year, I mean, You know, we're well off the highs of the year, but this is a chart. This is a trend that only wants to move up higher. Rough quarters, but it looks as though we've come off of overbought levels and we're looking to rally back here. And if you're looking for other instances of inflation, simply take a look at UNG, not UNG, this is Boyle. You can look at UNG as well, same chart. Natural gas, ripping out of a long-term downtrend into a long-term bull trend. Coffee, which I mentioned earlier, ripping. We are up on the week 21.28%. Lock in those coffee prices. This is nuts. Incredible. So coffee looking wonderful. All right, let's do some chart requests. All right, I know a lot of people. I got to see what members requested first. Oh, Boyle, I already just did. Okay, good. That was one. So good. So we have time to go over. How much time do we have? 13 minutes. All right, let's see who requested what. Pen, trusty old pen. All right. ORGN for Eric. What else do we have? LABU we already did. XBI we can do for Will. SBUX we did. Bullish on SBUX. COF. Is that coffee? What? COF. Oh, Capital One. COF. Lulu MSFT. ISR. Hey, Abel, how you doing, man? You got it. ISRG on the list. John Spencer, how you doing, pal? Do you use... All right, John has a question. Bob, do you use the put-call ratio? Sometimes. I'm not huge on it. I like the skew index. That is kind of like... using options as a mechanism to determine optimism. Tesla. AAINTC. Wow, I got a lot. All right, we're going to leave it off with SPCE for the lovely Jody. Paul, if I didn't say hello to you, hello. Andy Y, what do you guys think of the bank stocks? We're cautious on them right now until yields begin to hook back up. Longer term, though, I think they're going to do just fine. Let's face it. They're able to buy back their own shares. They're able to issue dividends. So the restrictions that the Federal Reserve placed on them are off. All you need now are rising yields to allow them to increase their NIM, net interest margins, and I think they're going to do just fine. So I view this pullback right now as probably an opportunity to nibble on the banks. You're welcome, Jody. Let's get to it. All right, ORGN. Let me just take a sip of water here. Origin Metals. Beaten up. I love beaten up stocks. monthly chart. I can't get a feel for it. Not a lot of historical data here. RSI 17.66 weekly time frame. It can go lower. Remember one thing about RSI. When you get if you read technical analysis for dummies, they'll tell you buy a stock or whatever when RSI goes down below 30 or 20. Look what that rule of thumb would have done for you here. You would have gotten killed. So remember that stocks below 10, and in particular down below $5 per share, you could see easily RSI down below 10. I've seen it thousands of times. So don't get lured in by the low RSI. It can continue lower. Now, what I'm looking at here is a bounce off the third standard deviation Bollinger Band. In and of itself, not a reason to go buying these shares. You have clear and defined resistance up here at around 973 per share. Here is your downtrend. The automated trend lines will not work. Not enough data here. Daily chart. All right, so automated trend lines just picked up on the daily chart. Enough data there. Here, I'll take them off. Oh, by the way, we're using TrendSpider automated technical analysis and seasonality. 35% discount code below. Take advantage of it. Back to our show. So here, I'll take it off. I did not draw this line. Put it back on. So the algorithm picked up support below, and we reacted. We bounced. Out of curiosity, let's bring up the raindrop charts. No blue doji like you had back here. That's what I was looking for. Back to the standard candlesticks. So it's trying to break out. You're inside of a wedge formation. You're now entering the apex of that wedge formation. You got to wait for the breakout here. No sensitivity. All that matters is by the end of the day, you close above. I'll give you a number in a moment. As a matter of fact, I'll share the chart. $7 a share. You break out and close above that mark, but it's got to close there. Don't buy it intraday. 3:59 Eastern Standard Time. You see it trading above $7. You can go for it. Not allowed to disseminate investing advice. Consult a professional. So daily chart is looking constructive here. And your RSI is already broken out. So you have an indicator leading price performance, bullish stuff, not enough to buy yet. Wait for a pullback, do a retest of the breakout point, watch for a breakout on price, thumbs up, you're ready to go, get long. It'll be great if you have a big short interest here to help propel it up higher. XBI, the biotechs. We already went over the biotechs with LABU, but we'll take a look at XBI as well. Automated trend lines are saying on a monthly time frame, we do have time to rally back here, no bueno month. We are down below support. We can rally back. Month is not over. Weekly chart. We broke support last week, and this is what I always talk about when you get a breakdown. Here's where people get hurt. They see the breakdown, and then all of a sudden they see the next week that it's rallying back, and they get FOMO, fear of missing out. Wow, I had an opportunity. I don't want to see this rally back and get past me. Don't worry about it. Many times what happens is that you get your breakdown, then a rally back gets tapped. Prior support now is resistance, and it fails. Wait for a closing. Wait for a close tomorrow, 3:59 Eastern Standard Time. A close back above resistance on a weekly time frame. then get long. We'll keep this active for a couple of weeks. And we're good to go. So our alert is set. Set it and forget it. What's our RSI doing this week? We do have a weekly breakout on RSI. So no reason to go buying the ETF just based upon that though. Daily chart. Why is this like this? Ugh, killing me. Okay. You know, if you want to speculate, you could look for a retest of support here of 122.30 thereabouts. Excuse me, 127.30. See if that holds. Keep a little bit of sensitivity there, not much. I wouldn't buy it because of the weekly chart, unless, of course, we really rally off of that level and close above that weekly resistance mark. And we're not going to keep this active that long. I'm not really serious about this trade because, again, I'm worried about the weekly chart. Remember, the longer the time frame, monthly charts take precedence over weekly charts take precedence over daily charts, and so on and so on. So we had a bearish reversal bar on the day. Little doubt that we're probably going to pull back and retest the support level. Yet again, no rush here. I'm concerned about that weekly chart. Watch the close tomorrow. It's really going to matter for XBI moving into next week. Next chart up, COF, Capital One. Now, this is not a money center bank. This is more of a regional bank. It's a good bank. It's a good week. Really good week. I mean, here again, the automated trend lines. I did not draw these lines. So you could see that we broke support earlier in the week, but now we have reversed to probably close above this line in blue. That would be a bullish event. Now, what you need to keep in mind on is that the market has told you many times in the past that you have resistance right where we closed today, 161.58, give or take a dime. So for me to buy Capital One, it has to do one of two things, or both, actually, to be honest with you. One, pull back, retest weekly support. That's sexy. That's good stuff. I'm keeping breakthrough on here due to the fact that I want this, if we break through it tomorrow, I want this alert to cancel out. Because if it doesn't hold that weekly support level, then this is not a trade we want to be involved with. We'll keep it active for 2 weeks. Then, if we nibbled here at this lower band of support, I want to add more on a breakout above pretty stiff resistance. In this situation, I don't want any sensitivity. None. All I care about is the close above. I'm going to keep this one active for 30 days. This is a good looking chart. I like the reversal on the week. I always like to say the market sends you signals, and the market certainly sent the signals so far this week. Two of them actually. One, we've recaptured prior support. Good stuff. That means that there are buyers of like mind willing to support the shares. Two, the other signal the market is sending us is that the obstacle that this stock has seen for months now has not gone anywhere. You have resistance immediately above. So for those who bought the dip this week, good for them. For those who did not but still want to buy, I would stick with the strategy I've laid out here, so that way you stay safe. Daily chart. It's a down day today, but all down days are not made alike. We reversed off the lows of the day, bullish. I would stick with the weekly strategy that we've laid out, because if this lower band of support, this is the weekly support level, if it fails, look out below. So 3:59 Eastern Standard Time tomorrow, watch Capital One. What else do we have? Lulu. I haven't looked at Lululemon in a while. Great company. Great day. Monthly chart. Massive breakout. All-time highs immediately above $400.36. We're going there. Weekly chart. Here. This is the algorithm telling you, beware. Here's my manually drawn line. Here's the algorithm. This is going to be, if we break through all-time highs, this upper band here, this red line, is going to be your rising upper band of resistance. So if you're swing trading and you're looking for a place to book profits, this is a great way to do it. Just set your alert. And you can keep this one active for, for as long as you want. 60 days, just change the trigger type to, as many times as you want. Touch, bounce, create alert, and you're good to go. Good looking chart. Really good looking chart. Great monthly chart, weekly chart, daily chart. There's nothing not to like here. Just keep in mind, resistance immediately above. That's the only negative I have to say about Lululemon. I mean, volume outstanding. Good stuff. Bullish. MSFT. All right, MSFT broke out today. Let's go to a monthly chart. This is what's keeping the trip queues up. Microsoft right now is my nemesis. Strong monthly chart. Strong weekly chart. Daily chart. It's a breakout day today. Looks like it wants to go higher. Now, the only thing I'll point out here is that we're quite extended on Stokes. And that's not even my main concern and the reason why I came to this chart here. Understand where we are on a macro view. Quarterly chart. RSI 95.46. Stokes nosebleed levels. Yearly chart. RSI 95.40. Trading up and above the third standard deviation Bollinger Band. This is, to me, it's a ticking time bomb. So on a intermediate and short-term basis, bullish, no doubt about it. But be aware of where we're at on a macro basis. That 150,000 foot view of the battlefield, week, quarterly, monthly charts, very overbought. Excuse me. Okay. IBEL. Did I write this down right? I think Abel wrote this down. Yeah, I wrote it down wrong. This is for Abel, ISRG. Great monthly chart. Outstanding. Weekly chart. Outstanding. Outside reversal bar or a bullish engulfing bar. One of my favorite candlestick patterns. For those not familiar with candlesticks, I have a free tutorial below. My five top favorite candlestick patterns. It's free. Just use the link below. You'll get it. So weekly chart, great volume this week. Institutional demand, this is going up higher. Daily chart. Rough week last week, but no follow through to the downside. We held support. Excuse me. Apologize. A rough day yesterday. Inside day today, we're going up higher. Good volume. Very nice. Bullish. Oh, by the way, I didn't use the automated trend lines. Go back to the weekly charts first. Here's the breakout point. And it looks as though we're going up higher. Daily chart. I want to see if there's any resistance levels. Oh, this is the value. Okay, this is why we had that reversal day yesterday. Again, the value of the automated trend line, folks. 35% discount code, TrendSpider below. Cheapest price on the web. So this upper band here was resistance yesterday. That's why you got the reversal. Just like you did back here. So just keep in mind, if you buy this stock, you're going to have a rising resistance level up above. I would be interested if by chance we pulled back. I'm going to keep a lot of sensitivity on here because I love the monthly chart. And we're good to go. Bullish on ISRG. Tesla. Not a great month. The only positive I have to say are two things. Two positives on the monthly time frame. We haven't made a new monthly low, and volume is very light. Weekly chart. Very much what we saw earlier. I forget what stock it was, where we had the breakdown. I believe it was XBI weekly chart. Same deal here. We broke down last week. This week, we're trying to rally back. You got FOMO, fear of missing out. Guys want to jump in, catch Tesla, their dream stock. They could get disappointed. Right? If we fade, I would wait for a breakout here above resistance at around 651, 652. And we'll keep this active for a couple of weeks. I'm interested in the trade, but not the way this is shaping up at current. Yes, we're off the lows of the week. One trading day left to go. Maybe we'll break out by the end of business tomorrow. I don't know. I'm not that smart. But all I know right now with the facts at hand is that we broke support last week. We had a continuation breakdown this week. We've rallied off the lows. We're still not above support, currently resistance. Those are the facts we have at hand, right? With those facts as a known, I don't want to buy this stock. Now, if my alert fires off by the end of business tomorrow, then I'm interested in buying. Daily chart. Not a good day today. We had an up market today. And with Tesla, showed relative weakness. And not just today, yesterday as well. So I'd avoid right now. I'd watch to see how we close out the week on Tesla. Alcoa, they've already reported. Materials in general are firming up. Steel, U.S. steel, firming up. Alcoa, no different here. We had quite the run, but we've stopped going down. Yes, we did put in a new month-over-month low, but we've rallied back. This support level here, which is an algorithm, I didn't put it there. Take it off, put it on, is critical. Critical support. I think that this is a buy, but you need to use a stop, because if we break through this support level, it's going lower. And that support level, I'll give you the number in a moment. And we'll just keep this active for a few days. I'm not long of it, just for illustrative purposes. And that number is, resistance is at 36.70, around there. Give or take a dime. Weekly chart, good week. But much as you saw with XBI, much as you saw with Tesla, we broke down last week. A reversal bar this week. We're still not above resistance. Good volume on the week so far. Daily chart. Daily chart, we saw a breakout. Good breakout. Automated trend lines. Great stuff. But the weekly chart, which we can overlay, we have resistance immediately above. Watch for a continuation move here. And a good entry point is if we rally up and through 37, less than that. 37.79, we have a volume shelf here. Daily, oh, that is the daily chart. Intel, I can do Intel, but they reported earnings. I don't know if it's going to show up on this chart. What the hell is this? INTC. I mean, it doesn't look good for Intel tomorrow. We're off the lows, but the street did not like this report. So, CEO chip shortage could stretch into 2023. What does that mean? Inflation. Intel shares trading lower. Looks like they missed. Looks like they beat on EPS. What did they miss on revenues? Looks like they beat on revenues. I'm not sure what they're talking about here. Non-GAAP revenue, $73.5 billion. Street consensus, they beat on revs. 28 versus street. They beat on EPS. I'm not sure what they're... I don't know why it's selling off. Probably because of the chip shortage issue. because the earnings numbers look pretty good. That's probably why you saw this surge initially on the shares. So I think it's the street's looking into guidance on Intel. So I have to say, be careful here. Maybe it'll shrug it off by the end of business tomorrow. But at current, with the facts we know at hand, the way the street's interpreting this report, it's not good. So I would avoid. SPCE, we're going to leave it off at that. Let me go to comments. $4.80 shenanigans. Hey, buddy, haven't seen you in a while. China releasing reserve metals to stimulate. Yes, they're not just doing with aluminum. They're doing with a ton of other commodities as well. They don't just store up, as we do, a oil reserve. They store up commodities. They store up reserves in copper, etc. And yes, you're exactly right. They're releasing those reserves onto the market. All right, SPCE. Horrible month. This is a sell the news event. Weekly chart. Not a great week. We've rallied back, but let's face it, we broke support. We've seen this multiple times already tonight. XBE, Tesla, Alcoa. We saw weekly breakdowns, rallies back this week, but we're fading, unable to recapture support levels. You got to avoid, unless, of course, by the end of business tomorrow, we recapture. What am I doing? Recapture resistance. And this is the wrong line, Bob. There you go. Starting to fade here, folks. There you go. You could do it. Why is this doing that? Oh, so it wasn't me. It's actually TrendSpider that's messing me up here. All right, I can't set an alert there for whatever reason. Let's try it again. Now it's good. SPCE. We're going to keep this active for a while. Now, 28.28 is good support. And again, we're going to keep this active for a while because I like SPCE. And we're good to go. Daily chart. Not a good day. Relative underperformer, bearish key reversal. Avoid. With that, folks, thanks for joining in. Smash that like button if you would. Don't forget TrendSpider, 35% discount code below. Everybody have a profitable trading day tomorrow and a great weekend. I'll talk to you soon. Take care.